Okay, so it doesn't work that way. You need to work, showing up every single day, showing up every single day. That is what it is even going to make your testimonial sweet. It's even going to make your testimonial interesting for people to listen to. But if the moment you started out and everything is working for you, do you think like who will even wake up early morning and be doing 9 to 5? Who will be even waking up to be reporting to a boss that he doesn't even like? It doesn't happen that week. So you need to work. Okay, you need to work hard so that you'll get it. So one thing about me when it comes to trading is what I didn't figure it at once. I didn't figure it when I started out. I've developed. You get it every week. My eye open to new things. My eyes open to new things. So I started not long ago when I like wanted to understand how gold move. Do you know the number of hours I've put in to figure out that how to trade gold? Do you know the number of hours I've put in? A lot of crazy hours, morning and evening, back testing and live testing. You get it? So you need to understand that that is how life works. You need to work very hard for you to get whatever you want in life. So that's how it works. People will come to your DM asking you, oh, please, I want to learn how to trade. Please, can you teach me? I don't have money. They will give you a long story. But when you organize free trainings like this, they will not even show up. If you post on YouTube something like educative, they will not watch. What they want is someone showing them like a lifestyle. Motivation is not going to get you where you want to get in life. It is about the discipline. It is about you putting in the work. That is what is going to get you to wherever you want to get in life. If someone is just showing you his Lamborghini, someone just showing you some lifestyle, that things doesn't, it's not even going to get you to. You can watch them, motivation just flashes and go, but the discipline is what's going to stick with you. So you need to be disciplined to put in the work, to do the work. But even though motivation sometimes helps, it's more like it makes you feel like you can also do it. But that is not all. You need to understand that motivation is not all. You will need to put in the work by practicing. Okay. So to those who are new to trading, okay, to those who are beginners who are new to trading, when it comes to trading, we're having a lot of concepts, a lot of things that it is out there. Okay, trading is like life in general. When we came on this set, no one gave us manual. Okay, no one gave us manual on what to do, this thing to do. Sometimes our parents will show us we have to follow this path. Our parents will be telling us to the various institutions that maybe we start from, the various churches, the schools that we attend will tell us this is the path that we need to follow. And it differs from everyone. It differs from everyone. Okay, it differs from everyone. It all depends on where you are situated or where you are located. Okay, so it's different. That is what trading too also what implies. When it comes to trading, the concept is also different from everyone. Everyone sees the chart differently. So when it comes to trading, you're having a lot of concepts out there. It's the same thing in life. If you want to make money, if you want to be rich, if you want to to be financially stable, we're having a lot of ways, there are a lot of paths you can use to be making money. Okay, it is not only trading. Some people, when it comes to the digital space like this, some people can make money by affiliate marketing. Some people can make money by digital marketing. Some people can make money by sales and marketing. Some people can make money by content creating. A lot of stuff. It's the same thing when it comes to trading. When it comes to trading profitability, when it comes to how to see the market, how to determine when to maybe know that a currency is going to appreciate in value, or when to buy, when to sell. We're having a lot of ways, a lot of concepts out there. You get it? A lot of concepts out there. Everyone's system works. It depends on how the person uses it. That's what you need to understand. So when it comes to me, the things that I don't mostly complicate things. Okay? I don't mostly complicate things. So if you want to follow me religiously, today what I'm going to be doing is to show you or to give you the various concepts, the things that I concentrate on for me to decide on either to buy or to sell. Okay, so this is what this is what you are going to be doing, and I'm going to tell you why I use that concept. Okay, I'm going to show you why I use those concepts. So when it comes to my trading, okay, when it comes to me deciding this is the current market price. Is it going to buy? Is it going to sell? That's what a lot of people, mostly when it comes to the market, they get confused on. When to decide on, is this thing going to buy? Is this thing going to sell? Mostly a lot of people get it confused. They don't know what exactly to focus on. Because when they go to the internet, okay, they see a lot of concepts. And sometimes too, I've been a victim of that thing before. Sometimes if you watch some people, like the kind of things, the kind of concept they even like they explain, it's very difficult for you to even understand them. You get it? They are not wrong, they are right, okay, because they did their research, they live test the market, they back tested the market and noticed that this is the concept. So trading, I always say, it's like trading is spiritual. Okay, it's spiritual. No matter what you focus on, it's still going to align. It's all about being patient and waiting for the right time, waiting for your time to come. But when it comes to the various concepts, they all work. You get it? They all work. If you study the concept for a very long time, you will notice that it works. But sometimes we the traders, we the individuals using the concept, we are not patient to wait for our time to come. So it is like life in general. Okay, sometimes those people that we started life with, some people are successful, other people like became successful very at their earlier stage when you guys started. Okay, and some people too are still at the trenches. Some people too are trying. So everyone's time is going to come. Everyone's time, everyone is having its own time. That is how trading also works. You need to be patient to wait for your setup to align. But waiting for the setup to align, they will go to the internet and go and see someone whose setup has aligned, and maybe they don't know the time frame the person is even focusing on. Maybe the person is using the 1 minute time frame where things happens very fast, where trades mostly plays out very fast. Setups, he gets set up every single minute. He gets a setup. You are comparing you that you use maybe the daily time frame as your directional bias. You use maybe the H4 time frame as your directional bias. You are focusing on such person. Maybe the person uses the 5 minutes, the person uses the 15 minutes. You don't understand all these concepts, and you put unnecessary pressure for yourself, trying to like just massage your system for things to align or for things to be in your favor. It doesn't work that way. Just understand your system, backtest your system, live test your system, and see. You get it? So it's all mostly a lot of people don't have they don't have a track record. That's why mostly they get confused on what exactly to even focus on. You get it? Because they don't trust the system. The system hasn't given them a lot of wins. It hasn't given them some profitability. It hasn't given them some profitability. So they will mostly doubt it, and they thought like someone is having a better system than them. But instead of them to backtest it for long to see if it works, they don't have that time, patience to wait for things to align. So when it comes to how I see the market, so first of all, okay, so this is for the beginners, especially those who are confused on like what exactly what concept, because they've been scrolling on their social feed and they've been seeing like some people are concentrating on fair value gap, some people are focusing on maybe smart money concept, some people are focusing on a lot of things, and they don't know like what should I focus on. You get it? So that's why when most people join my bootcamp, they said, like you've brought some relief, because these people were complicating things. The people were complicating things and they were confused. But the way I explain things to them, they mostly see like, oh, this is very simple, this is very easy, and like people are complicating things out there. You get it? So you need to get someone who understands whatever is doing, who is having a simplified system. Okay, so it's not about the complex stuff that is going to make you profitable. It's going to make you profitable. It's about the simple, the basic stuffs. Okay, focusing on just few things, and you are there waiting for them to align. Then you are there to go. That's what you need to understand about trading. Okay, yeah. So when it comes to for the things that I mostly focus on, fundamentals. Okay, the economic event is something that is dear to my heart. It's something that I have to watch and see the current state of the currency, the economy that I'm trading their currency pair. Or when it comes to the commodity, it has to happen. So let's say maybe you didn't check an unannounced news and Trump has imposed tariff on China. You say, oh, maybe everything is aligning. Okay, it doesn't matter if everything is aligned. Maybe there was a resistance over here, so you thought, oh, maybe we're having double top. you're having multiple resistance over here. So you think, oh, your technical analysis is going to make price move down. One thing you need to understand, as I always keep on saying, the market does not move based on what the lines you draw on the chart. The market does not move based on your deep knowledge about the technical analysis. What moves price is the economic event, okay, the economic activities. That is what moves price. You get it? That is what moves price. So no matter how good your setup is looking like, if fundamentals are against you, you are going to get things wrong. So I'm always cautious, especially to gold. If you trade gold, you need to be cautious. So as I'm watching the calendar, I'm watching the news. You get it? I'm watching the news to see if there was any headline. If I see a nice setup, okay, if I see a nice setup like what the trade that I took on Friday, this one, where is it? Yeah, this trade. With this trade that I took on Friday, when price came to the area of interest, as I explained it, I did a video. I circulated that video telling you that I'm waiting for price to come to this level. Then I'll execute, what do you call it? A sell. I will execute a sell. This is what I was waiting for. So, yeah. So this is what I was waiting for, to take a sell. When I saw something like that, I didn't just pull the trigger. I didn't just, maybe calculated my risk reward, place this thing over here because price has got into what? Price has got into a key level. Price has got into a reactional level. So the chances that price is going to come down is I have to watch the headlines and see what is happening around the globe. Has Trump imposed tariffs? Has maybe Israel bombed, what do you call it, Syria? I have to be checking all those things. You get it? I have to be checking all these things. What is happening with Russia and Ukraine? I have to be checking all those things. You get it? For me, before I'll execute, I don't just say, maybe if I don't see any headline, any red folder, maybe then I will check the calendar and see what's happening. If I notice that, everything like is calm, then I can peacefully execute this case. So this is where I executed a sell. Okay, I got like 1 to 2. It was Friday though. I got like 1 to 2 price move like this. You see how nice price move? You get it? So price move, like I had like 1 to 2. Yeah, I think like, yeah, price 1 to 2 or so. But I think I closed. I didn't wait for this pullback. I wasn't part of this pullback. Yeah, so I closed it. Gold, gold, sometimes it can be. So this is where I took the trade. You get it? This is where I took the trade. Price was on this key level over here. So I took the trade. I was expecting it to move more. Yeah. So these are the things that I need to check. So what I'm trying to say is what fundamentals is very, very important. Okay. So fundamentals plays a role when it comes to me pulling the trigger. Okay. Because you need to understand that you are what? If a doctor makes a mistake, someone is going to die. So you too, when you make a mistake, when it comes to trading, you are going to lose money. You get it? So money too is something that is very hard to come by. So you need to treat it as something precious. Okay, you don't have to just be pulling the trigger, just be executing buy and sell with no further checks. You need to be checking those things. So fundamentals is very important. That's the economic activities. Okay, so it can be economic, it can be geopolitical event, it can be social, it can be political. Okay, those elections and those things, they are very, very important when it comes to deciding where the pair is going to move to. So you need to pay attention to the fundamental. Always check, especially if you are trading like any US related pair, check the fundamentals. You get it? Check the fundamentals. You need to understand how to interpret them. You need to understand the events and its impact on the currency you are trading. Then I will check, okay, after that, I will check I have to check the direction of the market. So market structure. You need to understand how to read price. So these are the basic concepts you need to. You don't have to do a lot when it comes to deciding on when to buy or trying to understand the market. You don't have to do a lot. Market structure is simply going to help you to know the direction of the market. Okay, it's going to help you to know who is dominating the market. If you come to the market and you don't know who is dominating the market, you are always going to be at the wrong side of the market. So when I started out in trading, I used to be at the wrong side of the market. For now, it's very hard for me to complain the market has the stop loss hands, because those times I didn't understand trading on a key level, trading on like the time frame to trade on and those stuffs. I didn't understand market sections and those. So I used to just be doing random things and my stop loss mostly gets hit. They get it. But when it comes to, you need to understand market structure. So market structure is going to help you. Who is dominating the market? We haven't two participants. We haven't buyers and sellers. Okay. So you need to understand who is dominating this market so that you follow their path. You can't use your $10 to what? To control this market. You follow. Okay. You'll be a follower. When it comes to the market, you have to be a follower. Follow the big players. Okay. What the banks are doing, the transaction the big companies are doing. Okay. Are they buying more of the dollars? Are they buying more of what? Gold. You need to understand this concept so that you follow their path. You get it? So how are you going to know that buyers are currently in control, apart from fundamentals giving you a clue? What's another way or another concept you are going to use to determine this is what? Your understanding about market structure. Market structure is going to help you to know the direction of the market. Okay, so when you come to the market, you have to first of all decide who is in control of this market. Is it buyers who are in control? Is it sellers who are in control? Please, can you hear me? Can you people hear me?
We can hear you.
Can you? All right. Yeah, so you need to understand. So market structure is going to help you to know the direction of the market. The direction of the market. So after knowing the direction of the market, you need to understand the concept of, market structure. So when it comes to market structure, if I've joined my training before, I talk about candle structure and pattern structure. You need to understand the concept of candle structure. So last time, I remember I took a trade on gold. I explained why I took that trade, even though pattern structure was what? A downtrend. Because of my understanding on what candle structure, I got to understand that the trend is going to change before even pattern structure would change. So you need to understand if the market is what? In an uptrend, what are the things that is going, what are the things are you going to see to know that the market is in an uptrend at this point? The market is in a downtrend. Candle structure is going to give you a clue. Okay, so if it is in an uptrend, the market needs to what? Keeps on what? Breaking the highs of the previous candle, keep the lows, maintain the lows. You get it? It needs to keep on. So it's like this when it comes to candle structure, for you to know that this trend is going to keep on moving up. So mostly market candle structure helps us when it comes to what? Your entries. You get it? When it comes to your entry, candle structure is what's going to help you to execute. So sometimes I don't wait for candle to close because of my understanding on candle structure. I don't wait for what? Candle to close. By the moment the candle is in session, I mostly execute buy and sell based on what? Candle breaking the high. If it's a buy, candle breaking the high of the previous candle. So this is how it goes for you to know that structure is what? An uptrend. Okay. For you to know that it's an uptrend, for you to know that, maybe this market is going to keep on moving up. If you have seen candle like this, okay, if you have seen a bullish candle like this, maybe on a key level, what are the things are you going to see, or what are you going to see for you to know that this market is going to keep on moving up? When it breaks the previous candle, the tip of the high of the previous candle, it gives you a clue that this market is going to keep on moving up. So it can either be the body of the candle, or it can be the wick. You get it? It can be the wick of the candle. So this is what gives you a clue. So if a candle has formed on a key level, you don't have to even wait for the candle to close. The moment it breaks the high, it gives you a clue that this market is going to keep on moving up. So these are the things that I'm going to take into consideration. So this is how it looks like. Then When the moment it flips, this gives me a clue. But the moment it will break the low, okay, the moment it takes the previous candle low, it tells you that the chances that this trend or pattern trend will shift towards a downtrend is very high. So if you see something like this, okay, if maybe you want to take a buy and you've noticed that maybe the candle has broken the previous candle low, you need to be very careful. So you mostly have to wait for what? If this happened on what? The higher time frame, you have to move to the lower time frame to what? Wait for a shift in trend, okay, to give you a clue that, oh, maybe this one has been validated, so price is going to keep on moving up. You get it? So all these concepts, I mostly talk about it in the bootcamp. So those who have joined before understand what I'm talking about. So this is not where I have to what? Time is not at our side for me to go deep into these things. So market structure, okay? So you need to understand how to read the market. When it comes to how to read even the pattern structures, sometimes I watch what people are doing on the internet, and especially if you're a beginner, it becomes very confusing. It's very hard for you to read. Sometimes you see them doing something like this, or maybe the trend is uptrend. This is what they mostly do. Okay, on the internet, this is mostly what they do. They will tell you. It took me a very long time for me to figure out how to even read it, even though I understand that it makes, I know a lot of people know that when it's an uptrend, it makes higher highs and higher low. But with a higher high, how are you going to what? Even understand that these are the candles you need to pay attention to. Some people, what they will do is what they will just do it higher highs and higher lows. This is how they mostly do it. Okay, they don't pay attention to what they make the minor candles, the minor pullbacks. They don't pay attention to this. Is what they mostly do. And it becomes very confusing. And one thing you need to understand is what? Even a tiny candle like this, when you see a candle like this tiny, this minor or tiny candle over here, change something. You get it? It changed something when it comes to reading the trend. But a lot of people don't pay attention to. A lot of people, the way they read things, they read the market structure, it becomes very difficult for you to understand. You get it? It becomes very difficult. I know a lot of people that understand that when it's an uptrend, it mostly forms higher highs and higher lows. But how to read the higher highs and higher lows are the most difficult part. So when the trend is an uptrend, for you to know that what buyers are dominating this market, it keeps on making more of what higher highs and higher lows. And if the market is in a downtrend, it keeps on making lower lows and lower highs. So you need to how you are going to know those things are compiling or bringing the candles together, the way the patterns are formed to be able to read it. They get it. To be able to read it. So you combine them. If it's lower low, you see continuation of bearish candle. If it is low high, you see continuation of bullish candle. So you need to pay attention to that. So that's what is going to help you to know who is in control of the market. You get it? Who is in control? Mostly that is how the market moves. And from my experience, it is something, this concept, I don't know who developed this concept or who found out this concept, but it is something that really, really works. You get it? That is how the market majority of times, that's how it moves. You get it? You need to understand that higher highs and higher lows, it's how the market moves in waves. You get it? It moves in waves. So I explain it when you join the training, like why higher high, and the trying to bring live examples with the higher highs, okay, and the higher low. This is how mostly the market moves. So if you see something of this sort, if you see the market making more of higher highs, it tells you that buyers are dominating the market. If you see the market making lower lows and lower high, it tells you that sellers are dominating the market. So when you see something like this, I mostly find those things. So when you get to time frame, but I mostly identify these ones at the higher time frames. You get, so you need to know your higher time frame. When it comes to the higher time frame, it varies based on what the trader really, really is looking for. So as I'm saying, maybe if my higher time frame is at the H4 time frame, someone's higher time frame might be the daily time frame. Someone's higher time frame might be the weekly time frame. So it varies based on the trader's preference, what the trader wants to see, based on the trader's experience. You get it? So it varies. Someone's higher time frame can be or not in the H1 time frame, but you have to test it out to see which one really works for you. But for me, when I tested it out, one thing I noticed the market really, really mostly works very well. If I'm basing or if I'm focusing on the H4 time frame structure, it mostly works well for me. You get it? So, and I'm seeing profitability when I'm focusing on those time frames. So if something has not broken, why do you want to fix it? I have to just stick to that since it's working for me. Then I will move to the lower time frame to find my entry. So market structure is very, very important. So the reason why your stop loss mostly gets hit is because you are the wrong side of the market. It varies, though. It varies because sometimes the H4 time frame might be what? An uptrend. But if you move to what? The lower time frame, like maybe 15-minute time frame, it might be a pullback, and the pullback might be what? An impulsive move at what? The lower time frame. So it varies. You get it. It varies. That's why I'm saying you have to do your own research. But if you want to follow me religiously, what I mostly focus on, what I focus on my directional bias on what? The higher time frame. Like my higher time frame is the H4 time frame. I look at the trend at the H4 time frame. Then what? I'll move to the lower time frame to just find my entry. If there was a clear trend that the market is an uptrend, that means when I move to the lower time frame, I have to be looking for what? A buy. If the market is a downtrend, that means when I move to the lower time frame, I have to be looking for a sell. That is the basic concept when it comes to trading. You get it? But a lot of people are complicating stuff. And this concept, even though it sounds simple, but it's not easy for you to what? It's not easy for you to master. You need a lot of time for you to be able to what? To master this thing. So the market structure is very important. The direction of the market is very important. So if consistently your stop loss gets hit, understand how to read the market. Okay, understand how to read the market. So the bootcamp, I mostly explain this concept. I explain it very easy for them to understand how to read the market structure by using candles to identify the higher highs. You bring them together to know that if it is higher high, is mostly a compilation of a bullish candles. Okay, the highest of the bullish candle. That's what makes the higher high. Higher low is a compilation. It can be one or more candles. That's what you need to understand. So it's not only about two or more. One candle can make a difference. So you need to understand that. So the direction of the market is very important. So with this market structure, as I see, we have, for me, I define this one as what? Candle structure, and pattern structure. That's how I define that. And pattern structure. So that's what so this two concepts helps me to know the direction of the market. That's why mostly I get the direction. Most often I get it right. You get it. And when you start applying this concept, sometimes if you are someone who you mostly find it very difficult for you to predict the direction of the market, the moment you start understanding this concept, you know that what your prediction is more. It's now becoming more accurate. Like it's now accurate now. Okay, even though you are not going to get it every time. That is why we have invalidation. That's why the market is not going to be an uptrend always. Sometimes it changes to a downtrend. So that's why we have invalidation. You get it? It's not going to be on one-sided always. If it is a downtrend, sometimes it's going to change to an uptrend. So these are the basic concepts you need to understand about the market. It does not move in one direction. You get it? It does not move in one direction. So after identifying the market structure, knowing the direction of the market, what I will do next is identify my various reactional levels. So they are the same thing as the support and resistance level. You need to understand this concept is very, very important. So the market participants are buyers and sellers. And if they meet at one particular point, we call it a battle zone. Okay, if you see something like this, if buyers does this bullish candle is means buyers are in control. And if you see something like this is where it's closed. So that means this is where the next candle is going to open. So if you see something like this, there was a bullish candle that's close over here. There was a bearish candle that's open over here. So this point has become an equilibrium level. It has become an area of interest. Why is it an area of interest? Because we are having buyers and sellers trying to interact over here. You get it? So the chances that when price is moving again, it is giving a clue, because markets mostly react on the past activities. It reacts on the past events. You get, it's the same thing when it comes to even human beings. If you maybe let me try to bring an example. If you're having a bad experience about something, maybe let me take a relationship for instance. If you have gotten broken heart before by either a male gender or a female gender, if you are most often if you are going into a relationship again, it becomes like you are scared. You are not going to be committed as you used to be when your heart hasn't been broken. It's the same thing when it comes to this market. It's mostly what react on what historic data. It mostly reacts based on what has happened in the past. Okay, so if the market has interacted, okay, or has merged over here at some time ago, when price is coming again, because it's mostly what looks what has happened in the past to react on. Okay, it works like magic. Anytime price will get here again, there's a reaction. That's why we term these levels as what? Reaction levels. Price is either going to what? Break out or what? Do the same thing again. So when anytime price will get to where it reacted in the past, what is going to happen is what? If you are a trader and price has got, you are watching the market and price has got into a previous what? Reactional level or a previous area where buyers and sellers would try to like something like a conflict or what? A battle, you need to be very careful because the same thing can happen again. Price is going to be slow at that point in time. Price is going to be slow. They are going to fight. Okay, they are going to fight to know who is now going to take over the market. So when price gets here, if it makes a U-turn, that means buyers has dominated this time. If it breaks above, it means that if it moves down, sellers have dominated. If it moves above, buyers has dominated. So you don't want to be in the market when they are fighting. Okay, you don't want to be in the market when the fight is going on over here. What you have to do is to wait for what? For the fight to be declared. Then you are going to follow. You are like a gold digger. Okay. You are like a gold digger. You want the fight to be what? To end. Then the person who is going to win the fight, then you follow the person. Okay. You follow the person who won. That's what you need to understand about the market. So some people, what they do is what? They want to involve themselves when the fight is happening. That is why your stop loss mostly gets hit. He gets it because this is a battle area. And anytime the fight is ongoing, the fight can happen like 5 years. You get it? If it is about higher time frame, like weekly, sometimes it can just be, price can just be bouncing on this level for a very long time before a declaration will what? They will declare who wins, either the buyers or the sellers who are going to what? Take over. So you need to understand when price gets to this point, kindly stay out from the market. It depends. Mostly, these levels mostly get respected when you are using the higher time frame, but you don't see the levels, you don't respect the levels, or you don't mostly take it into consideration because it's a lower time frame. Lower time frame, the tendency of these levels being as in seeing the significance of these levels is very low because things happen very fast, and the chances that it is going to just break it without no struggle is very high. So lower time frame you mostly ignore, but when it comes to the higher time frame, things takes time for it to align. Things takes time for things to happen. So you need to also make sure you are paying attention to those levels. So I mostly use support and resistances. It helps me when it comes to, especially to know the level which is very peaceful, the level which is safe. Let me put it this way. For it helps me to know the safest levels where to just to comfortably execute a trade without maybe the chances of price coming back to my stop loss. You get it? So that's why I use these levels. It helps me when it comes to where to place my safety stop loss. Okay, so it's very, very important, and it gives you a clue that buyers are also in control, sellers, because if you understand candlestick anatomy, if you understand the psychology behind the formation of every candlestick, if you see something like this, okay, since this is a battle level and you know there was a fight going on and there was a psychology behind the formation of every single candle, You get it? There's a psychology behind the formation of every single candle. So if price has formed on this level, you get it? If you understand the psychology, okay, if you understand the science, or if you understand the behavior of when a candle of this sort forms on a key level, what does it signal to you? You get it? If you understand the cycle, you don't have to memorize the names. As those who have attended my training before, I've told them the names is not important. What is important is understanding the psychology, understanding what it means. So those who understands knows that with this long distance tells you that there was an exhaustion. Maybe buyers have lost control. When you see a small body like this, that means they push price down to this level. Okay, so at this point, sellers are, even though it looks like a bullish candle, the body looks green, but a signal that what sellers are in control because they drove price down to this point. Buyers were fully pushing price down. Sellers came in and drove price to this side. So looking at the nature or looking at the size of the candles give you a clue. So mostly this levels also helps you to know that what price can move down because this is a key level, this is a reactional level. And you have seen this candle over here giving you a clue that what price can move down. Okay. So these are the things. So I focus on support and resistance for me to know like where to execute a trade. And for me, it also helps me to know that, or maybe this person has won this participant has won the fight, this participant has lost the fight. Then I'll be at the winning side. I don't want to be at the losing side. I'm a gold digger. Okay. Yeah. So support and resistance. You get it. All right. So support and resistance. I've talked about the market structure. Then after knowing these things, then I will do my multiple time frame analysis. So that's when I start from the higher time frame, just bring to understand the structure, the higher time frame, multiple time frame. So this is what mostly a lot of people get it called, multiple time frame analysis. So I mostly see that my directional or my sectional time frame, what is telling me. If my sectional time frame is telling me that, oh, maybe buyers are dominating the market at this point, sellers are dominating the market at this point. So what am I going to do? It tells me to, if I move to lower time frame, these are the things that I have to look for. So I do my multiple time frame analysis. You get it? And sometimes too, I use trend lines. Trend line is also, it's like without trend line, you can still be making it, but it's also an additional confluence. It supports your decision. You get it? It gives like an extra spices to what your source. You get it? So trend line is not, but it also gives you a clue that, oh, this is what is happening, especially if something like this price is making higher highs at this point, something like this, it gives you additional confluence in the sense that maybe price has gotten to, this is what a support, and now trend line is aligned at this point. It's an additional, this is what a bigger trade. Okay, this trade is high probability trade setup because trend line is telling you that this level is strong, horizontal line is telling you that what this level, but without trend line to support and resistance is going to tell you that you can take a buy, okay, with the understanding of candle structure, if understanding of candlestick. Okay, yeah, so this is also an additional confluence for me to know that for me to take a buy or a sell. So I should have brought candlestick anatomy, understanding the psychology, candlestick anatomy. So understanding the psychology behind the formation of every candlestick without you memorizing pin bar, memorizing doji, memorizing engulfing candles and those things. You can, if you understand the wicks, the importance of the wicks, okay, if you understand the body of a candle, what does it signal? Okay, or what does it signify? You easily explain without knowing the meaning and memorizing the names of the candles. You get it? So basically, and market, the time of the day is very important. Time of the day. So if you come to the market, especially to those who trade currencies, if you come to the market and you come to the market at the wrong time, you are always going to be kicked out. The market is going to kick you out. So you need to understand the timing. The timing is very, very, very important when it comes to trading. If you are trading at any random time, you don't respect when the major market players comes into the market, you are getting things wrong. So you need to understand the times that the major market players come to the market, then you follow them. Okay, they have specific times that they mostly come to the market based on what the financial hubs they belongs to. So if you are trading the lending session, you need to understand the time that the lending financial hubs open. Okay, so the lending financial, you can get Frankfurt. If you get like the Germany session, they are market financial hubs. The times that they open, okay, that's when the big players start making transactions. That's when the banks start making big transactions, trying to transfer monies around the globe. You get it? When it comes to the New York session, you need to understand the times that the United States financial hub is open. The New York, okay, which is at the financial hub is at New York. You need to understand the times that what their business activity starts, so that you follow suit. You don't have to come to the market when they are not in the market. The market is going to be slow. I've already told you that your lines is not what mostly drives the market. What drives the market is what? Economic activities. When something, a central bank governor is speaking, when maybe a world leader is speaking, when there was a war, when there was like, these things is what drives price. Okay, so if you come to the market and you are not seeing any major news, you don't see any news, one thing you need to understand is what the market mostly becomes very slow because there's no any economic activity. That's why if I've noticed when there was bank holiday, the market becomes very difficult to trade. It becomes very slow. You get it? Understand this basic concept and you move. So during the boot camp, if you have joined my boot camp before, I mostly explain this concept together. So after understanding this concept, then you bring everything together to make your decision. You get it? So we bring everything together, then we do back testing. Okay, we do back testing. We bring all this concept, then what we do back testing to see how effective how effective the system is. You get it? How effective the system is. So you need to. These are the things that I focus on. So if you are a beginner and you are confused on what exactly to focus on, what to the things that you need to focus on, how when it comes to the market you are confused, where to start from, what I thought should I do, like what time frame should I focus on, you are confused, you can, even if you have not attended my training before, you can write these things down and start researching about it, how it works. Then you start implementing it. You get it? You start implementing. But if you have joined my training before, in November this month, we are going to be having some again, the next batch. So if you are interested in joining the training, you can just sign up to that. I'll just give the how you can go by for you to be able to join. So let's do a weekly recap on what I'm expecting. Is anyone having a question? At this point, is anyone having a question? With the things that I've talked about, is anyone having a question? Any questions so far? Okay, so let's try to bring everything together. So mostly what I do when it comes to the chart breakdown, let's do some chart breakdown. So we are with this week, what are the things, what are we expecting from the market? So Monday, you need to check, as I said, with the fundamentals. So looking at my fundamentals using the forexfactory.com. Okay, so you go to forexfactory.com. You can download the app on your phone, or you can use the web. Okay, you just search forexfactory.com. You get it? You're having a lot of news websites. Even your brokers mostly give you news. But this is what I've used for long, and it's simple. They've made it very simple for you to understand. So on Monday, November, so 7:30, we are going to be having CPI on CHF. Okay, now we are in standard time. So the time has now moved 1 hour ahead. So if learning session opens at 7 a.m. GMT, now it has shifted to what? I think it has shifted, right? Or not yet? 10:30. So I'm not seeing any. I'm very sure it has shifted. Daylight savings has shifted to. Yeah. So yeah, this news event mostly happens at 12:30, but now it has been scheduled to 1:30. So it means the time has moved 1 hour. So if lending session opens at the US session opens at 12:30. Now it has been shifted to 1:30. Okay, maybe 12 o'clock, 1:30. It has been shifted 1 hour ahead. So if lending session opens at 7 a.m. GMT, that's now shifted to what? 8 a.m. GMT. So that's what you need to understand. So looking at the fundamentals on Monday, you are going to be having CPI, you are having manufacturing PMI. Okay, so we have some cool news events around. Okay, so as I'm saying, when you start your analysis, these are the things that I'm expecting it to. Maybe these are the things that I will be looking forward for. So these are the various, when it comes to the various levels, you change it to line charts. Okay, so these are the various turning points in the market. So when it comes to the support and resistances, the body of the candle is what we use. That is what mostly, to me, some people can use the highs and lows. Okay, some people will just, this is how some people will plot their levels. They will just use this one. But for me, I don't use this ones. I mostly use the body of the candle. So if you want to get the body of the candle, so as I said, the line chart is going to help you with that. So these are the various turning points. When it comes to the weekly time frame, so with the weekly time frame, these are the body of the. So you need to know the level. You need to get the levels very like accurately. You get it, because sometimes you'll be using, you'll be trading breakouts. So with breakouts, you need to be very sure the body of the candle has broken and closed. If you are taking a buy, it has broken and closed above. If you are taking a sell, it has broken and closed below. You get it? But you are going to be knowing, you are going to get to understand these things when you identify the levels correctly. But if you don't do it well, you are always going to be deceived. You are going to be at the wrong side of the market. So when it comes to the daily time frame, so with the daily time frame, we have these levels over here. Okay, you have these levels over here. Sorry, this is weekly time frame rather. So coming to the daily time frame, so let's analyze the weekly time frame since we are heading towards a new week. Yeah, so looking at the chart at this point, okay, even though the overall direction of the market is what? An uptrend, price is making more of the higher highs and higher lows. By looking at this chart, what is it telling you at this point when the market opens, or this week, what are you expecting? So I'm still, since the previous candle has taken this candle that closed has taken the previous candle low, I'm still expecting gold to keep on moving. But as I said, this is not one move price. The fundamental, I don't know what is happening around the globe. You get it? So I need to check the news events and see, do you have any positives? So Summers praises power warns inflation could erode US economic credibility. Okay, so we don't have any major news event. You get it? Trump plays nice with Asian alliance stand by repeated. So we don't have any major news event. So at this point, what I'm expecting is what? According to what I'm seeing on the chart with the technical analysis, what I'm expecting is maybe gold can keep on moving now, because this is the next reactional level at the weekly time frame. Looking at the weekly chart, okay, looking at the weekly chart, maybe gold can keep on moving up. Like looking at the previous candle too, it tells you that what? It gives you a clue that sellers have lost momentum. Looking at how we had a big exhaustion. So price there was no turning point around this point, but price can maybe just make a turning point this week, create a support over here. You get it? So I'm saying these things because of how the past candle looks like, because of this exhaustion. This tells you that what sellers have lost control in the market. So what maybe it can happen is this is where the candle closed on Friday. So maybe price can just also be moving up and down. Okay, I don't know if it all depends on the fundamentals, but maybe we can have something like this price to create a support. I'm just imagining things. You get it? I'm just imagining, because the logical level that you're expecting price to come to when it comes to the weekly time frame is at this point there may be this is a reactional level. So with a reaction level, I can't say price is going to continue moving up. Maybe it can still break it below and head to the next reactional level. At this zone, that's the maybe price can head to this zone. This is where maybe when it gets here, yeah, it's going to consolidate. But when price gets to this point, there's no guarantee. You need to wait or look for evidences before you just project that price is going to keep on moving up. But when price gets here, you don't execute instantly. So those who set maybe buy limit, waiting the moment price tap this one, then you have to wait for confirmations, because there's no guarantee that this level is still going to hold for price to keep on moving up. You need to wait for confirmation. So what are the confirmation? You wait for candlestick, okay? How the candle is going to form, the timing. You need to wait for momentum. The timing is going to tell you if there was buying momentum, there was selling momentum. You need to wait for the timing too as well. So when price gets here, then we decide, okay, based on the timing that we are going to present ourselves in the market. So this is what I'm expecting long term, or what has been presented to us. Logically, I'm expecting price to maybe come to this level before it will move up. This is weekly. This is going to take a very long time for it to happen. Okay, it can take like years. The whole of this year, maybe it cannot even get to this point. You get it? The whole of maybe by the end of this year, it can even still just maybe. So what I'm expecting is what? You can get a U-turn over here. Price can just make a U-turn based on what? I'm saying this thing based on how the previous candle gave what? A long lower exhaustion candle. So maybe this exhaustion tells you that sellers have lost control. So price can what? The next candle can just make some exhaustion. Then the following week price will keep on moving. But I don't mostly what? I react. I don't predict. You get it? What I mean is what? I wait for evidences. Okay. I don't just predict and just make decision before the market takes action. I react with what is happening, then what I will follow suit. There was no resistance over here. There was no key level over here. So at this point, I still strongly believe some people will use Fibonacci levels to say that they are all prediction. You are trying to predict, but we need to react. If price gives us our support before we react, people will use Fibonacci, the lows and highs, plot it like this. Okay, maybe price has gotten to maybe 50% Fibonacci level, then they will say price is going. But I don't base my destiny on that. I have to wait for candle to give me or the market to tell me that this is a support price going to keep on moving up. So this is at the weekly time frame. This is just our long-term projection when it comes to gold. So with the weekly time frame, logically, or what has been presented to us, watching this chart, I'm expecting price to come here. Then what? It's when it gets here, then we see what's going to. This is a battlefield. So buyers can dominate, sellers can dominate. You wait and see what is going to happen. So let's move into the daily time frame. Moving to the daily time frame. Yeah, so the daily time frame, if you look carefully, you notice that the trend at this point is what? A downtrend. All these highs, okay, these higher highs and higher lows, price has taken them all. Okay, price has taken them. So a new structure has formed, price has pulled back. So the downtrend keeps on moving. So it's this how the daily time frame has been the structure is looking like. It gives us a clue that maybe the long-term sell that you are seeing on gold can happen, because the daily time frame trend is what? A downtrend. So it can happen that what? Price can keep on moving down based on what I'm seeing at the daily time frame. Because the daily time frame at this point has given us a nice support, a nice resistance over here. So the chances that price can fill this zone, we have a reactional level. Price can fill this zone and get to this level is very high. You get it? It's very high. So that's the daily time frame. So the daily time frame, I'm looking forward for a sell. If it's an active market session, I will just be looking for a sell, because it has now created a fresh resistance level. Price has now created a fresh resistance level. So the chances that price can just so when it happens like that, you just move to the lower time frame, wait for price to come back to this reactional level, then you look for a sell at the daily time frame. But mostly we base on our decision on the reactional level, which is the H4 time frame, the reactional time frame, which is the H4 time frame. So the H4 time frame is also telling us, looking at the trend at the H4 time frame, it's an uptrend. Okay, so you base on this the sectional time frame. Okay, you base on the sectional time frame, it's still a downtrend. It's still a downtrend. You get it? It's still a downtrend. It's still a downtrend. So at this point, You see, we're having multiple reactional levels. We're having 1, 2. And at the same time, we had the daily zone over here. So the chances that price can keep on, I don't know if the dollar is still going to be strong. If it happens the dollar is going to be strong, then I'm expecting price to keep on moving down. Okay, maybe this point will be your what? Your target 1. And maybe if it gets here, price can just move. Okay, based on, so I'm still waiting for, if market opens, the chances that price will keep on moving down, because the daily has created a fresh resistance, and the H4 time frame, we're having multiple reactional level. So looking at the lower time frame, let's see if you see. So this one, I saw it at, yeah, so the daily time frames to, yeah, so price can keep on moving down. That's what I'm seeing. Price can keep on moving down based on what I'm seeing. So my projection for gold with I'm not having, or I'm not seeing any fundamentals that says that gold is going to be strong. Okay. Any major news event that I'm not deep into fundamental. Maybe if something of that sort has been released, I don't know much about it. But that's my projection when it comes to the technical analysis. Okay. At this point, any question? So some people have raised up their hands. If you have a question, I'm allowing you to speak. Any question? If there's no question, then I have to call it. Any question? Any question? Who was taking my seat? Any question? Can you people hear me? Can you people hear me?
Yes, yes.
No question?
Kindly repeat on how to identify resistance areas and
Yeah,
support.
so that topic is very deep. That topic is very deep. So this is how the market moves. So it moves highs and lows. So if price is moving up, you need to understand that this is what the support and resistance are basically levels where buyers and sellers meet. So a point area where you see bullish and bearish candle, it's what it's if it is above, it is a resistance level. If it is below, okay, if the level is what? If the level is below, so this is how it looks like. Something like this. Basically, this is how it looks like. So let's say if you see something like this. This is how it looks like. So this point, you see buyers and sellers are meeting at this point. So if the level is below, if the level is below a resistance level, we call it what? If the level is below, if candles are below the level, we call it resistance level. But if you see something of this sort again, if you see something like this, and we get a bullish candle like this, so this one becomes what? This point becomes a support. So you see, at this point, the candles are above the level. So this is what a support. But you need to know how to identify them on the chart. You get it? We have valid levels and invalid levels. If price is currently at this point, coming to this point to identify your levels doesn't make sense. If candles are around this point, coming to this point to identify your support and resistances doesn't make sense. So you need to know the valid and the invalid levels. Okay, valid and invalid level, how to identify them. You get it? So for you to know your levels, you just change it. If you want to know the accurate levels, you change it to a line chart. Then what you identify the various turning points. That's what is going to help you to know the various plotting out the accurate levels. So let me take the last question and we bounce. So November bootcamp, if you are ready to join, you join. Let me take the last question. If you have any question again, let me know so that I'll bounce. You have to prepare for the new week to see if you can make some money. Christmas is coming, you need to make money because our loved ones will be asking us monies. You need to lock in on the chat to make some money to spend during the Christmas season.
What?
Money, yes, sir. Yes, sir. I'm listening. Any question again?
Yeah,
Yes, sir.
please. Good evening, sir.
Good evening.
Yeah, please. Thanks for your presentation. But I want to find out from you. You do account management, like your services apart from the training. Do you do account management?
No, I don't do account management.
Okay.
I don't do account management. So with if we're this thing, when it comes to trading, it's especially if you are dealing with an investor who does not understand how the market works, the person is just going to put pressure on yourself. So I don't do that. And for now, even to get a big fund, it's not a big deal. So to the new beginners who think like the moment they make one or two profit, they think they can take someone's money and trade for them, you are going to get issue or case. You can get a profit and big amount of money. Why do you want to go and take someone's money? Just fund your own account. You get it? Account management is something I will not, unless maybe the person understand the game. He has given you the risk percentage, or maybe I agree to for you to lose like 4%, 5%. That's fine. But if you are dealing with an investor who does not understand the game, he thinks you have to make profit every day. And this market is the same thing as sales. So sometimes some weeks you can make a lot of money. Some weeks you will not even get one sales. You get it? Yeah. So that's why I don't do account management. I rather prefer trading profit than trading someone's amount. Any question again? Any question again? Okay, last question, then you go. Last question, then we go. If there's no question too. Yeah, so those yeah, okay, I'm listening.
My question is, on the on the higher time frame, let's say on the daily time frame, when we're doing the analysis, I saw that a bullish harami occurred at the daily time frame, of which you anticipate that price must sell at the daily time frame to the bottom of the bearish candle. That was I saw it as being a bearish harami. So
What is bearish
if you are
harami?
having yeah, if you're having an account of, let's say, a $50 account, can you trade on that on that daily time frame as maybe you enter sell at that 10 at that time and target at the end of the bullish the bullish candle at the opening of the bullish candle, so that can your account hold that trade for?
So I don't know for how long you've joined my group, but I've talked about it's not about the time frame you are trading, it's about knowing your stop loss pips. You get it? It's about knowing your stop loss pips. So your stop loss pips is going to help you to know the stop loss, the loss size you can use. So if you measure over here, how many pips is this? It's around, are you talking of this candle?
I'm not seeing no. It's showing the your screen is showing the yeah. I'm talking of the daily this candle, the daily time frame. So it's like bearish harami. So I'm asking if you sell at that point on the daily time frame. So can your account like maybe $20 or $50 hold this trade?
Yeah, so it's not about you need to understand your stop loss pips. You get it?
Okay.
You need to understand your stop loss. So first of all, ask yourself, where are you going to where are you going to place your logical stop loss? Where are you going to place your logical stop loss? So maybe if based on price action, based on structure, this is the logical level I have to place, because the only time this structure is going to be invalidated is when it has taken the next candle has taken the previous candle high. That is when I will get to know that it has been invalidated. You get it? That's what,
Yes,
it's
I
the
get it.
system has been. So when you are placing your stop loss, you need to place it at what? Where price is going to get invalidated. Okay, so if I place it over here, where I have to ask myself, where is my entry price level? This is my entry price level. So the stop loss pips from this, my entry to here, where the level that price is going to get invalidated, the structure is going to get invalidated is 500 pips. So with your $20, you need to ask yourself. So
It
with your
can hold. It
yeah.
cannot
So
hold.
it's not about
Yeah.
the time frame. Yeah. So it's
It's
not
about
about the
your
time
account.
frame you are basing. It's about the
Yeah.
pips, the stop loss
Your your
pips.
your your
That's what's
account will
going to help.
blow and even your stop loss has not been reached. Your
Okay.
account will blow
Okay.
and
So
your stop loss has not been okay.
yeah. So you need to know your stop loss pips to determine your loss size.
Thank you.
You're welcome. Okay. So if there was no question again, see you all next time. Bye bye.
Bye bye.
Thank you very much. God bless you. Thank you. Thank you. God
You're
bless
welcome.
you.
All right.
I was have a question.
What's your question?
Yeah, my question is it advisable to trade gold with $20 or $50?
So your question is the same as what the previous guy asked.
Yeah.
So you need to know
So
your
you need
stop
to
loss.
hold on.
Okay,
Okay.
okay.
You need to know from your entry to your stop loss, the pips. So knowing this, so the person was asking. So this from your entry to your stop loss is going to be, the range is going to be 500 pips. So with this 500 pips, what loss size can you use with regards to what your account size? Okay, so if you don't want to go through the calculation, you can use forexfactory.com, especially when it comes to gold. So with your, let's say, is it, what's the name? My FX book position size, my FX book position size calculator. You use this platform. So you select the instrument or the asset you are trading, gold, XAU, USD. XAU. So the account size is $20. You get it? So with your risks, what risks are you? What's the risk percentage? Maybe 1%. You decide. So this one you use 0.01. So the stop loss is 500. Your account size will not even be able to hold it. So you can't get the loss size to even use. it can't hold it. So you use this one, define your stop loss pips, and use this platform. It will help you to know the lot size you can use on the trade. Is it clear with you?
Yes, please. Thank you very much.
You're welcome. All right. So see you. Bye bye to you.